Good morning, everybody. Hope you're all bright and dandy on this Wednesday, the 26th of June morning. Morning, Kay. How are you going?
Good morning, Ryan. Good morning, everybody. Yeah, easy going today. Waiting for the end of month, quarter, half year to kick in for good, and then we will see what's happening and what there is to do.
Yeah, very much. You've got your match today, haven't you? Your final match?
Yeah, we have, and it's an interesting group because we're all on 3 points, and yeah, it's all to play for today.
All to play for. I hope it's a better spectacle than our shit show yesterday.
Yeah, that was a bit of a boring one, wasn't it?
Yeah, particularly coming after that Austria game, which was absolutely outstanding. Really good game, that one. So yeah, hope there's more of that later today. We shall see. Right, let's get stuck into it. And China continue to lift their foot off the pedal. They set their midpoint at 7.1248, up another 23 pips over yesterday. So the trend is definitely looking clear at the moment. We're seeing a bit of a uplift again in the offshore one, the one where you can really trade, dollar China CNH. As you can see there, we're now moving well into 729 and knocking on the door of 730, so breaking above the prior highs that we got after holding support on a dip. So looking good for the moment on that one. We'll see how that continues to perform over the days ahead. Over in Japan, there's been a bit of talk about this revision to GDP that's potentially going to be happening. Basically, what's happened there was some construction data that I don't know if it's been a mistake or whatever, but that apparently is getting revised down a good chunk, and thus it's going to hit this Q1 GDP revision that's coming. Analysts are doing their thing, saying it's going to affect monetary policy at the BOJ and their decision making and whatnot. I'm not so sure. They've already indicated they're half looking through the Q1 data, and the data since has picked up a bit better anyway, including inflation and other metrics as well. So yeah, it might be a downward revision, but we're a couple of days from closing off Q2, so I'm not sure, Kay, anyone's going to be that bothered about it.
I wouldn't think so. I wouldn't think so. The market is the market, as we've been saying for most things, the market is already has put that Q1 really in the rearview mirror. It may just
may get an algo blip or something when it hits.
Yeah, something like that, or drag a comment also, or drag out a comment also. But I wouldn't trade it personally. Really, I would. Well, you know, in the global scheme of things, it's not really helpful. Let's put it that way. But it doesn't change. If it would have been the other way around, it may actually have had a little bit of an impact. But no, we are. The yen is not. Nothing's changed for the yen right now.
No, well, apart from the fact it's knocking again on this 160 door and a bit of resistance coming in against the big figure, more so than we saw last time we were up here when it had a little nudge through, hitting those multi-decade highs there. But yeah, just something to keep an eye on, because I think this, I think we could have a bit of a moment here if we bust through here. We're likely to get a bit of a follow through off potentially.
Yeah, it's a bit hesitant. I would think that looking at where we are at the end of the quarter, the first quarter for them as well, we may find some exporters also sitting on offers. That is something that we need to monitor here around 160. But obviously, we're actually no. Yeah, we tried. Yeah, we are here at 160. There may be a few offers around, but yeah, if it busts through, equally accelerate.
Yeah, we've hit the high print. We've printed 160. So there we go. We might have something on the cards. We shall see. Anyway, we'll keep half an eye on the pricing while we go through the rest of the news. Over in Australia, now we had the Assistant Governor Kent speaking, the RBA Assistant Governor Kent speaking First, he came out saying that a range of measures shows monetary policy is restrictive, and that recent data reinforced the need to be vigilant to upside inflation risks, hence not ruling anything in or out for interest rates. As was mentioned, those exact lines in the last statement, said we need evidence of a further fall in core CPI to ease policy. Now, whether he had these inflation numbers before, I don't know. I suspect maybe not, because they tend to write these speeches a few days before. But anyway, we then got CPI data coming out, their new, well, it's been a few months now, but their new monthly number, weighted mean CPI. And it came in much hotter than expected and much hotter than previous. So we've seen the market getting a bit hawkish over the RBA. We know from recent meetings that they have always discussed rate hikes, but decided that stand and hold was the best course of action. The market is going to look at that data and start to think that maybe a RBA hike is closer. So we're moving into a bit of a similar situation that we saw from New Zealand when their central banker talked a bit more hawkishly, and then afterwards the data went the other way. But for now, the Aussie's on a bit of a front foot due to that data, and we need to see what the next comments are from the RBA or whatever, if they choose to make comments of that. There was also a trimmed mean number that came out alongside that, which came in at 4.4% versus 4.1% previously year on year. So all their metrics pinpointing higher for inflation. Do you think this pushes the RBA to a hike, or maybe just to comment, make a talk of a hike a bit more stronger?
It's to me, it's still, I'm still in the camp of they will hike only if really needed. They will look perhaps at some other things as well, but it does push the market to needing to price it in, because the risk is now clearly there, right? So yeah, I wouldn't say it's a done thing, but looking through looking at the past statements, we can't rule it out at all.
Yeah, I don't know what the odds are for the August meeting,
unless we get like real weaker data in between now and what is it, the 6th of August.
Yeah.
Unless we get real weaker data, the Aussie could actually benefit from it.
Yeah, and they'll get another CPI report before their meeting, 6th of August. So yeah, keep an eye on that. If that's another hot one, then we're really going to see a ramp up for hike at that meeting.
Yeah, yeah.
But again, we're just playing this game where, you know, the market thinks one thing, gets a bit of data, and then has to get the TIPEX out and change its mind again. But the RBA have been pointing out that inflation has been sticky and been bumpy, and that it's a pretty hard path to get it back to target. They still don't expect it back to target until middle of next year. So this does play into that rhetoric. Just depends how high is too high for the bumps, shall we say. Over at the ECB's Ren, he sees bets for 2 more cuts in 2024. So market view, if you like, as reasonable. He also says that the market's view of a terminal rate of 2.25 to 2.5% is also fair. So that would mean roughly another 200, 175 pips of cuts from the ECB. So let's call it 8 cuts, shall we say, to get it down 200 pips. So slow and steady. The ECB is apparently going to start its next strategy review after the summer break. We don't want to disturb all those jetting off to for their holidays, topping up the tan. So they're going to wait until after the summer break. This is to discuss what they're going to be doing with their sort of monetary policy framework and the like. We've heard previous stories months ago that they might look to do something like bring all their interest rates in line with each other, the marginal rate, deposit rate, and main rate can be at different levels. So it's that sort of thing they're going to be looking at they're not going to let us know, apparently, the findings until potentially the second half of 2025. So don't go trading euro on the back of that just yet. Fed Bowman, one of the chief hawks over at the Fed, says we are not yet at the point where it is appropriate to cut rates. Should data show that inflation is moving sustainably to 2%, it will eventually become appropriate to gradually lower the policy rate. She's willing to raise the target rate at a future meeting if inflation progress stalls or reverses. And she's begun to shift her view on policy to a more scenario-based view. As far as her dots go, she doesn't see any rate cuts for 2024 now, and she shifted the cuts to 2025. Fed Cook says current policy is well positioned to respond to the economic outlook. At some point, it will be appropriate to cut rates. The Fed has tools to adjust if there is an unexpected shift in unemployment. It says we know there are problems with commercial real estate and there are issues looming larger for smaller banks. Also speaking about the dots, says it's a good idea to pay attention to the distribution of the Fed dots rather than or over the median view of the dots. Looking at a bit of data we got from the US yesterday, not an awful lot. We had some house price data. This is the FHFA numbers, which are showing no real problem, slightly down over last month's reading, but still healthy 6.3% month on month. Just a slight miss, but still positive numbers. The Case-Shiller, S&P, HPI as well, again showing no real let's say fall in prices, still remaining up at healthy levels. So nothing yet from that side of the sector, the sales side of the sector in housing. We also had the Philly Fed Services Index out that improved to 2.9 from minus 0.6 previously. Then we got the consumer confidence number, which it beat expectations, but it still softened over last month. Some of the other metrics, excuse me, a bit mixed as well. Current conditions came in at 141.5 versus a revised 140.80 or 0.8, so slightly better there. Expectations were slightly lower, 73 versus 74.9 previous, and the inflation expectations 1-year CPI came in a bit lower at 5.3%, but that's still running at quite lofty levels. Over in Canada, we got that CPI data and a bit of a surprise for Monsieur Maclem over there in Syrupland. CPI beating expectations, was expected to drop a pip, actually went up 3 over expectations, 2 over last month. Some of the other measures, the 30 measures that they use, also showing a bit of stickiness. The common, though, did come down 2 pips, but the median and the trimmed both went up. Also, the BOC core number there, which had that big couple of months of drops down to 1.6%, rose back to 1.8%. Still staying below the 2% line, but overall highlighting the bumpiness of inflation and that the stance from the central bank as well, that they expect bumpiness there. Dollar CAD didn't do an awful lot. It did react. We had a little knockdown too. This spike is just a retail spike. The actual low that happened in the interbank was 136.26, but we got quickly back above there, and we're still holding at 136.50. Still in this short-term downtrend. So until we break that, there's a chance that we still might be heading lower down towards the big 136 zone down there. Does it move the needle for the Bank of Canada, or just keeps them in, well, we're cut, we paused, and now we wait and see what the data does?
Oh, that's a good question. You know what? I think the other thing is perhaps weighing a little more on the Canadian dollar, that Trudeau having lost 1 seat that the Liberals had since 1990 in Toronto, and I'm starting to have the impression that they are trading more politics than actual data over there right now. and that is keeping the Canadian dollar a bit under pressure. But will it move the needle? The thing is, yeah, I mean, Rogers wasn't ready to give in to the weaker inflation data, but McClem was very hopeful, and yeah, that could just hold them still for longer now where they are. I don't think it will change anything regarding hikes or so, but it's just perhaps putting them back into the holding pattern now, as we see also the expectations for rate cuts have been screwed back on the back of that number. So, but more than that, as you say, it didn't do in for the Canadian dollar. It still a few bits there on the dips in the dollar CAD. Maybe more linked to politics than the actual data we saw yesterday.
Yeah, and also obviously the old month end stuff as well in the mix. With that too. JP Morgan had a little bit of review on the CPI data. They said it was higher than they expected, but they continue to see the BOC holding off on the next rate cut until the fourth quarter of this year. So maybe they'll get one right on this one with their forecasts. Politics, not an awful lot going on. Same old in France. More polls coming out, more polls showing Le Pen's group leading. Anywhere between sort of 34, 36, 37% is appearing in these polls. This left-wing alliance is still polling strongly as well in second place, anywhere between sort of 20, 25, 28, 29%. Macron still in third in all these polls, coming in around the 20%, 22% mark. So no change from polling there. Obviously, we creep closer to the election on Sunday, where we'll get the first idea of whether voters are going to put their money where their polling mouths are. So we need to keep an eye on that one still. Maybe keep an eye out for the euro on Friday. Might just see a few people getting out of any euro trades, just reducing risk into the weekend.
Could be a funny one.
Sorry, mate?
Could be a real funny one on Friday. End of the month, quarter, half year, US PCE, and then going into the election weekend in France. I mean, I'm not sure whether I really want any euro in position on Friday. We'll see. But yeah.
No, I agree with that. If I've not got anything on and managing anything, I don't think I'm going to be putting anything fresh on. But yeah, well, still got some time to go. If euro trades up 109, 110 over the fixes and over the end of the month, I might be tempted just on the balance of risks. But yeah, we're 200 pips away, so 300 pips away, so that's hardly likely to happen, I don't think. Right, let's have a quick look what's coming up today on the data. I don't think we've got an awful lot coming out, but the NBA stuff out shortly. Got these building permits are just the revisions to the data we got last week. New home sales, I'll be keeping an eye on those. As Marcus just mentioned, Blake was talking about very bad house sales apparently on the daily roundup yesterday. Well, as you know, we've been looking at these sort of things. Again, sales, there's a difference between sales and construction parts of the housing sector over there in the US. So this will be, we'll start to see maybe whether we're getting some pressure from high rates in the sales numbers. We'll keep an eye on that one. So a bit of some minorish data from Canada as well, manufacturing and wholesale sales for that. Then we've got 5-year auction later on. We'll just keep half an eye on that to see what happens. I won't be hanging around for it. I'll give you a clue. And that's all the data coming up later. You got anything else to bring us, Kay?
No, I think you covered most of it. It's not there hasn't been any world shocking news out. The rand is on the move. Did they already announce part of the government over there? We are expecting it today or tomorrow. It does look like after the spike that we saw overnight and early doors, this thing now is really turning around. We are back below 18.2025, and we're around 18.12 right now. So is there something to be announced or already being announced that we missed? It's possible. it's still a bit of a limit border case whether the government is going to be one of stability or not. And of course, the rand will move, being an emerging market currency. That's it's really on the move here.
Yeah, there's quite a few of us trading this one in the room, so we're all been picking it up down below. So we're all interested when it hits the rallies. I got out some of mine yesterday in that rally up around the 725s. I didn't get any off in that move up there. I'm trying to let it run for a little bit.
I mean, this is starting to be a bit stressful. I had an offer in at 1835 overnight. I think the high, well, what I saw on my broker was 1834.80 or 70. Now I'm having a bid in at 1812, and the low must be like 1812.10 or so. I mean, I'm going to miss everything.
Trader's luck for that one. Yeah, I'm not. I don't know if I'm going to add or not. I might add down to 18, but then I might be wondering why we're down there if we get down there. So, yeah, this one's a good old roller coaster at the moment. So if you're following that, you'll see all our updates in the chat room as well. Dollar Mex is another one. I'm not actually in anything, but still keeping an interested eye over it. Still holding above the 18 level after the little dip under yesterday. It doesn't look like it wants to go too far. Getting a bit of resistance into this 1820 area, which is a bit of a more minor, shall we say, short-term level. Stick a line in there for you boys and girls. So that's the ballpark at the moment. 1820, 1800 or 18, the big figure for that one. Still the bigger level above, it's 1850. Looking at some of the other things, well, Aussie, as we said, has been on the move. Aussie dollar, it's moving, but it's not going any great guns because there's obviously a bit of influence from the dollar coming in at the moment. So that's just above, or was trying to poke above my zone that we've got here, a bit of a traffic zone. Really, we're looking up at this 67 level, which is a really important level. That's really capped things for the last couple of months or so. We've had little peeps above, but it hasn't lasted. So unless we get a move and a hold above there, that's your main level to watch. Then we've got down into low 60s really. This level, that intermediate level, should we call it, around 66.5-ish. It's one of these just on-off levels, but the more times we trade around it, the more it washes out. It's one of those levels that if we've been away from it for a while and we come back, that's when it tends to have some better reaction there. But yeah, keep an eye on the upside for that one. Aussie Kiwi, I'm getting a little bit interested in. We've got a move up to this loosish, let's call it loosish wedge, or you want to call it here. It's one of these ones, it becomes a bit of a tightrope walk when we're down here. I'll just zoom in a bit quicker, a bit slower. So we can move around it, but it just, as I say, we just tend to walk along it and, lean either one side or another. And that can happen on the upside as well. We can have breaks and it just walks around it. So it's half a level to keep an eye on. Again, if it might become a bit of a stretch point, but not necessarily one I trade. If we get a move up to 110, I might be interested, depending on the driver up here. As we've been talking about this one for years, we still have this magnet at 108 and the price always seems to come back to it. So if we're stretching to the top of a recent range up towards 110, maybe even up towards 111s, then as I say, I might get interested in trying a bit of a short to see if we get a return back to this level. I don't think the RBA will cut, but another hot CPI report next month might push them over the edge. We know they're a bit more flip-floppy than most when it comes to rates as they were in their hike cycle. So anyway, for this one, I'm going to keep a close eye on that one. Dollar China, I just want to have a quick look at the wider picture rather than the close up. So getting above here, we're now tapping on the door of this 730. Got a bit of a traffic zone from 730, 31, 32. If we get above 730, it's all going to become about these prior highs up into 735 and even up towards that 737 area. This trend is still grinding on. I expect it to be a grind. Always keep your ears open for comments from officials. If they don't want it to go too far too fast, you'll hear about it. They'll be pretty succinct about it, and then that's a time to assess your trade and see if the comments are strong enough, or even if they're going to allow it to go further. It really was the comment we got last week that got me jumping into a long in this one, because they've been adamant they weren't going to let it move, and then suddenly they're going to say, oh, we don't want it to overshoot. And that was a key comment, as we point out. When they want to tell you what's going on, they will be pretty clear about it. Kay, you got any thoughts about this one apart from the slow grind?
Yeah,
you looking for TP anything along the way?
Yeah, it's actually going faster towards 730 than I initially thought. I say this is going to go according to their daily fixing, and it's going to go grind up like those 10-20 pips a day. Yeah, okay, we are through this zone. Then I think we have to look at 731. It's going to be a bit of a level, and also the speed it goes, because we know that PBOC will likely not call a stop to it, because they seem now to be okay to let CNY, CNH slip a bit, but they for sure are not going to let it explode, right? And by the time we are back at 735, 37, they will probably already start to get a little firmer on it. But yeah, I mean, it's going well. I'm long, and I've got a smallish offer around at 731, just below. Take a slice off. I'm long from 726s, as the people in the room know. And yeah, I mean, just manage it a little bit, take a slice here. If it then comes back down to 28.5, reload it, for instance, and so on and so forth. But trying to keep it and trying to see what up to where they are willing to let things go.
Yeah, and a bit like you on your rand, I had a bid in at 27.50, and we didn't even get down. Well, would we get to 60 odds? So yeah, I missed that for an add-on.
Yeah.
So traders luck. That's the way it goes. But I'd rather be in it. In any way, shape, or form. Yeah, I'm in agreement. I think get up into that 31, 32 area. I might take a little bit off just to put it in the bank. And,
yeah, just to bank some. It's the way to keep your account ticking over, and it's never nobody is ever gone poorer from taking profits, and it keeps room in the account to do other stuff, or to add again, and you know, it's just the way we trade, and that's the way we are happy trading. So
yeah, and as well as taking profits, you're also reducing your risk as well, which is important as well. So there's always two sides to that coin. Right, Kay, do you want to have a little wander around?
Yeah, if you like. It's things are not moving too much, but let's have a look, because we are trading value date. There's been a lot of discussions around those value dates changes, but at least
can of worms, that one.
Come again.
So open up a can of worms with that one.
Yeah, no, I don't think it has a big impact, because, you know, whether you're a corporate, an asset manager, an FX neutral fund, you can still do the overnight or the Tom next to put everything at the right value date. I don't think it's going to be a big game changer for people having to do end of month, and end of quarter, end of half year. Because, you know, if, for instance, just as an example, in Japan, they have their last fixing of the quarter right on the last day, and they have like a very, very tight payment deadline. So and they can still do their stuff. So it's not really a big issue for people when you have access to doing overnights and stuff. So I don't think it's going to impact a lot, because most of the bigger asset managers, money managers, are already more dynamically hedging their flows when market move. So I don't think it's going to change a lot anyway, unless we see like really a problem. Right, euro dollar then. We are still in this triangle, but it is looking a tad heavy. Also thinking about the French politics, thinking about end of month value date. I wouldn't be surprised if we go and have a look at this 106.60, mid 106s before the day is over, and then that is if US corporates show up today. And also still thinking about, as I said, those politics. It does feel like euro is still on the heavy side, although some currencies are not really weighed down too much by this euro. So I think that we may see a bit of dollar demand creeping in for the rest of the day. And as well, do we have anything specific on the new home sales? But yes, that's just going to be put in a basket and thinking about housing after this month end and quarter end, I think. So I do think there is a chance, or there is a possibility that we are going to have a visit of the lower end of this triangle at least, and perhaps why not, if there's enough dollar demand, go and have a look back at 106 before the day is over, and then we will need to see what's going to happen for the month end on the FX neutral rebalancings, because that is painting a completely different picture. As we've seen, the European equity markets have been very much lagging, of course, due to those elections. The rest of the markets, and I haven't seen the bank models yet, but I would suspect that there is going to be decent dollar selling versus quite a few currencies. And one that I am keeping a very close eye on is the Aussie. We're also, if you look at daily, we're also still in a triangle here that started back in a long while ago. But it's also now that the top end of the triangle is coming in around those 67, 67.05, 67.15, whatever. If I see a setback on the back of those, if I see a setback on the back of any US corporate dollar demand today, if I see it, let's say move back in more towards the lower end of the 66 zone, I would be very interested, because I also looked at what the S&P ASX 200 was doing over the past month and months. And it paints a bit of the same picture, very much lagging the US indices. So equity-related models, I think, are going to show a decent, how shall I say it, a decent need for buying Aussie and selling dollars, perhaps, and I still need to confirm. But I think it would be possible. So if we see a bit of a setback here, a decent setback in the Aussie, I may catch a knife there, just around here in the shorter end. We may see this a bit clearer, just around here. It may already stop around 66.30. I'm going to look either one of those, 66.30 or even in the low 66s, if there is enough dollar demand and people getting forced out of a few of those CPI related positions. It could go a bit fast, so we will see this afternoon. That is one that I'm keeping a very close eye on. We haven't seen any demand kicking in Swiss franc yet. As I said, we have seen months and months on end of Swiss franc demand into month end, but right now Swissy is still under the cosh. Perhaps it's coming back a bit more in line with what's happening on the yen. It's an idea, but it's holding pretty well now in this 95.75, 95.90 zone on the euro Swiss. This is one that I'm going to keep an eye on for what's happening into month end. If we see another rally, especially then thinking about the euro, I may actually try and lean against those that 96.75, 96.5 ish. And assuming that we have the same similar kind of month end as we've seen on the past ones, we are turning around 89.75 in dollar Swiss. keep an eye on what's happening here around 90, 10, 90 and a quarter. Okay, look, it's been an area that's been traded quite a lot. And if we hit it there and we cap around there, around 4 p.m. London, for instance, it could just start to wane a little bit and then come back down. This is just a few ideas that I have going into month end. Yeah, the dollar rand, big setback, but I do think that, well, I haven't seen the news. We haven't seen anything really coming out of that government. We are expecting an announcement today, tomorrow. Market may look at it a bit in the positive way if the DA gets the deputy president role. I guess that's a bit the reason why we all of a sudden saw this setback today. People getting forced out a bit of positions. I think it's going to be a real yo-yo, this one, for a while, but I let some go yesterday as well, just as Ryan. Then I had an offering just ahead of this zone. I've said ahead of this zone I want to let some go more, but it just stopped shy of my 1835 offer. Unfortunately, I didn't get done, and now we are back. But I reloaded what I sold yesterday, and I'm for as long as we are holding this whole zone here, I'm okay to continue just to play the pattern and or just to play my strategy on the rand and buy low and let some go on the run up and keep a piece open. Joao, Kiwi and the New Zealand Treasury comments on a weak economy. Where did you see that? I may have missed this. I don't know where that popped up. Did you see anything about that, Ryan?
What's that, mate? Sorry.
About a weak Kiwi economy.
Yeah, there was. Let me have a look. He was out. Nothing major, I didn't think. Let me double check.
Anyway,
yeah.
Okay, we'll come back to that, Joao, if we find anything. Yeah, Monday. Okay, Monday. Yeah, so
Yeah, I've got it,
I
mate,
was just
if you want
looking
it.
at this dollar China, right? This is your 731, the last high before we had the move back down to 710. That's where I'm going to let some go. And funny thing as well is that we've broken under this trend line, which started around 2022. And look what we are doing now. We are just running along it. And I think for as long as this thing magnets, it's going to be this slow grind higher. Oh, okay. All righty. Oh, yeah. I recall that on Monday. Didn't really have too much of an impact, but perhaps it's playing a little bit in that Aussie Kiwi as well. Thanks for that, Joao, Ryan.
Yeah, that was last night, that or early this morning, that headline.
All right. Okay. Well, I missed it. I really missed it. Okay, Ryan, I think that is really enough. I think we covered most of the lines that we wanted to cover. I'm giving it back to you, mate.
Yeah, thank you very much, mate. One thing I just want to point out quickly, I'll take the screen back just quickly, because we've had the CPI data out from the UK. This is on the retail side, and it's just come out a negative 24 from a prior 8. Now, you may remember we had retail sales out on Friday, and the May numbers came in at plus 2.9%, a big snapback from a negative down 2.3% that we saw in April. So you can see these CPI numbers can be a bit of a reflection of what the headline retail sales does. So this number suggests that the big 2.9% we got last month or last week might reverse back to a negative. It just means it's a bit of a pendulum swing between the data points.
Limit short cable, Ryan?
I don't know. It's been rare that we've seen a huge move on retail sales on the data, but Yeah, we shall see. We've got a bit of time. If it shows a positive number, if expectations when we get round to it next month show another positive, I might think about having a little fish short into the data just to see a bit of a snapback. It's not linear that what happens here happens in the headline numbers, but it can be a bit of a bellwether indicator. But anyway, we'll keep an eye on that one. Worry about that next month.
By the way, just one thing, because we didn't speak too much about the sterling. It's still quite resilient, right? If you look at okay, there's euro in the euro sterling as well. But I mean, cable is well, sterling in general. If you look at some of the crosses, is still relatively resilient, right? Yeah, we know sterling Aussie is lower today because of the Aussie, etc. But in general, still doing all right, the sterling, right?
Yeah, still holding up.
No nervousness around elections also, huh?
No, not yet. That all happens next week as well. Oh, I forgot about that. Oh, great voting day tomorrow on US Independence Day. What a day to pick. Those guys will be off, and yeah, well, should hopefully give us some volatility. At least it means I can bugger off out early and cast my vote if I feel like doing it. I don't know if I can be asked with this one. I'm just fed up with the whole lot of them. But anyway, that's politics. We won't get into that on this show. Right. On that note, we shall call it a day. Thank you very much, K-Man, as always, for your stuff. And thank you to all you viewers for coming in and following us here on the Flow Show. Much appreciated. Have a great trading day, all. We'll see you all tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.